Hello there. This is Mitch Goldberg. This is Be the Boss of Your Money. Let me just get a couple of things going here. And we are just getting started. Let's get some music. Let's add LinkedIn. LinkedIn wasn't working well before. All right. We almost have a show going on. All right, here we go. Thanks so much for joining me. My name is Mitch Goldberg. You're watching my live stream, Be the Boss of Your Money, about investing, personal finance, the biggest stories in the world of finance, stocks, economy that you need to know about. We cover so many things like credit, from mortgages to credit cards, you name it. We talk about estate planning. We talk about taxes. We talk about a lot. The whole idea is so that you could be the boss of your money. AMC, what's the deal with that? I mean, if you take a look at the action today, AMC up 95%. I have news for you. It's flying higher even in aftermarket trading. And then take a look at Dogecoin up 23%. So we've got a good show for you today. We're going to go into this. I want to talk to you about what it takes to speculate. Should you buy this stuff? Should you not? And how to go about it. So we're going to roll the intro, and I'm really pumped up for this. This is going to be good. Ask your questions in the comments, whether if you're watching in the live stream or the replay. I'd love to see your questions. I love hearing from you, and that to me is the best part of this whole thing. So here we go. Welcome to Be the Boss of Your Money. We're just getting started. We're talking about hashtag Crazyland, AMC, Dogecoin. We're talking about FOMO with the meme stocks. Should you buy these stocks? Like, should you finally just give up the ghost and put some money into these? Buy some? Should they be a part of your portfolio? Do you feel like you're missing out and you're hearing other people talk about AMC to the moon and diamond hands, and you're just like, holy cow, these people are making all this money, and I'm just sitting here with plain old regular stocks, and I'm not making enough money, and I should be doing more? Well, this is the show for you. You've come to the right place, because this is not for everybody. I've seen this movie before, this crazy amount of speculation. It's just amplified in the world of easy trading, free apps, the stock market on your phone, Robinhood, and social media, spreading news around like crazy. That's really what this is emblematic of. We've seen speculative bubbles in the past, and that's right. I use the word speculative bubble because if you think that this is like normal, I have news for you. It's not. And there are some people who were first-time investors who are just throwing money into this stuff, and they're like, oh, wow, look how easy it is to make money. You people who think this is easy, because this is all you know. So because your worst impulses and the worst things about investing have just been validated in your mind that work, that are good, you're actually going to be in for the rudest surprise. And yeah, I'm 100% confident in saying that because I'm a financial advisor for 31 years and I've seen this before. I have seen people make so many mistakes, including myself. So I'm going to share with you the lessons. This is not to knock you, by the way. This is to share with you the lessons that I've learned along the way over 3 decades of being a financial advisor and from managing client assets and financial plans. That's what this show is all about. So I greatly appreciate you joining me. I know your time is very valuable and means a lot to me that you are spending some of it with me. We've got a couple of things, though, to talk about. And I want to make sure that you know how to speculate, because that's what the stuff is. The fact that AMC or GameStop or Dogecoin or Ethereum, whatever you're speculating with, the fact that these are flying high, that's not the relevant point here. The relevant point is, should you buy these? I mean, of course, you would have wanted to buy these before they went up, obviously. Now they're going up, and you've had plenty of opportunities to buy them. But everyone has a threshold of FOMO, a threshold of pain, where buying these stocks or cryptos could cause you pain if they go down. But eventually seeing them go up and up and up, that could cause you FOMO pain, fear of missing out. And you just have to finally take a shot and throw some money into them. And then you have Elon Musk, right? Elon Musk talking about Dogecoin. And you have other people like Mark Cuban talking about crypto, and Gary Vaynerchuk talking about crypto and NFTs and other digital assets, if we could call them assets. So this is what we're talking about. And AMC to the moon. Should you believe that? So we're going to do a quick rundown of the market. Then we're going to get into the heart of the matter. I'm going to give you the three or four core things that you need to know before you take a shot on this stuff. And I'm happy to say that a lot of the people I know, friends and family, who are taking a shot on this stuff, it's okay, because they have done what is necessary in order to take a shot on this stuff. Other people, not so much. So let's do a quick screen share. I'll pop myself up here in the corner. All right, I'm up here. Hi there, everybody. All right, so just a quick rundown of the day. We had a pretty good day today. I like this kind of day. Very boring June day. Averages were basically flat. Look at that. Dow at 34,600, up 25 points. That is, that is less than 0.1%. NASDAQ and S&P were both up 0.4%. That's not something I see every day. I don't actually ever recall seeing that. Gold continuing to inch higher. We've been talking about gold a lot, how it steadily broke through 1,800. Now it's over 1,900. And I think that's the real inflation play to me. I know I sound old-fashioned, but I don't think crypto has replaced gold. I think they're two different animals held by two different kinds of investors. Oil continuing to rally, up another $1. Oil pushing $70. The 10-year Treasury continues to drift lower, so at 1.58%. Who's worried about higher interest rates when every day we see the 10-year Treasury go down a little bit more, right? And the VIX, I'm just going to go right into the VIX here, 17.48. So the VIX continues to stand at 20, and we talk about that. Above 20, the market heads south. Below 20, the market could keep going north, and that's what we keep seeing. All right, let's take a look at some of the cryptos. We'll look at the big ones. Okay, Bitcoin up almost 5% on Coinbase, so not a bad day. I don't know if we really need to look at all of them. Ethereum on Coinbase up 7%. So overall, though, a lot of green on the screen for crypto. Green almost across the board, except for Polygon. I have no idea what that is. Not familiar with it at all. Outside of, there's Litecoin. Well, obviously there's Bitcoin, there's Litecoin, there's Ether on the Ethereum network. There's Dogecoin. There are a few others. There's shitcoin. I don't know. Is that a real coin, guys, or is that just like a play on a meme of a meme, right? So let's keep going, and we'll take a look at how stocks did today. Boeing moved up a little bit, but that's not really what I wanted to show you. Industrials, airlines had a good day today. Let's take a look at the FANG M stocks. Okay. Apple up, Amazon up a little, Netflix up a little, Facebook up 2 pennies, Microsoft off a touch, Google off a little bit, but overall pretty flat day. This is why the S&P 500 and NASDAQ were able to eke out a gain. Let's take a look at the Corona list. All right. Zoom off a little bit, but Zoom has been doing fine. Activision off a little. Peloton, still Peloton's over 100. DoorDash moving up a little bit. DocuSign holding on to that $200 number. Domino's and Campbell's Soup holding up. Okay, these are all like basically the pandemic plays. Okay. And last, let's take a look at the sectors, and then we're going to get into the heart of the matter sector ETFs. All right, so energy, no surprise there. Energy is the winner of the day. If you see this where my cursor is, energy hit a high, okay? It's 55.49 on the XLE. These are the ETFs that track the major exchange. These are the exchange-traded funds that track the major sectors of the economy. There's 11 sectors of the economy. Energy is the winner. Then real estate's been doing well. Hey, I thought real estate was supposed to go away because of the pandemic. Nobody's going to their offices and nothing's going to work. And well, anyway, real estate is doing very well. Technology had a halfway decent day. Financials were up, but who lost? Industrials, communications, discretionary, building materials, economically sensitive stuff was a wee bit on the weak side, but very small. I wouldn't make anything of today. As a matter of fact, today's the kind of day that I like, when you have just very small movement in the major averages. I don't really like these up 600 or 700 point days. Obviously, I don't like the down 600 or 700 point days, but it's nothing emotional to me. It's like, whatever. I've seen so many of these. But, when you have a down day of like 600, 700, 800 points in the Dow, and then you have a day where it goes up 600 or 700 points, I don't like those, because those big days just get repealed. The next day they just give it all up. And I like to see steady Eddie, solid, durable growth in my stocks, in the averages. That's what I like to see, and that's what we're looking at right now. Let's get to the heart of the matter. Dogecoin up 23 points. We'll call it up 24% in one day. Today is just the daily chart. Okay, so started here, went up to here, and let's look at AMC. These are the things I want to talk to you about in speculation, and I'm going to keep track of the time here. AMC is up another 8.5% in aftermarket trading after being up 95% today. You're not even looking at what I'm looking at. Let me show you. Okay, AMC up 95% today, up another 8.76% aftermarket trading. Dogecoin up 23.94%. There is no aftermarket trading for the cryptos for Dogecoin, because they just trade 24/7, 7 days a week. So if people like to trade over the weekend, now they could do it. So trade till your heart's content. Okay, so let's take a look at a couple of things. First thing I want to talk to you about is speculation, and we're going to talk about ways to speculate. Okay, because are we in a new paradigm? Should I be saying to you, or should you be saying to me, show me the money? Show me the money. Okay, I could do that again, but I won't. All right, I will just say that sometimes you have to.
I said it before, and I'll say it again. Life moves pretty fast. You don't stop and look around once in a while, you could miss it.
Yeah, I'm having a lot of fun with this. So let's talk about some of the stocks and what it takes to speculate. So the first thing, again, to remind you, we're talking about Dogecoin and AMC. And whether if these stocks are up 90%, 20%, 200%, it doesn't really matter. That's not the point. The point is, should you buy these stocks or this crypto? Should you get in on the action? So a couple of things we need to talk about, key things to consider when speculating. How can I lose money and how much? So this is pretty important. These stocks are going up on the greater fool theory. I'm not calling people fools. What I'm saying is the greater fool theory is when people buy something, an investor buys something strictly on the expectation that somebody is willing to pay a higher price, regardless of fundamentals or what the stock is. That's the greater fool theory. So how could this unravel? Well, right now, with AMC, what we believe is happening is a short squeeze. Investors are short the stock. They have to buy back the stock the higher it goes. And then AMC was able to issue stock, raise a lot of money, and it's trying to stave off any chance of bankruptcy, which means, well, now you can't say the stock is fundamentally worth zero in a bankruptcy. It's got to be worth something. And now that the economy is opening up, half the country is vaccinated, the economy is opening up pretty quickly. So now maybe people start going back to movie theaters, and AMC which is a heavily debt burdened company, can survive. So now you have to consider what's the stock worth. As far as a movie theater chain goes, it's got about a $35 billion market cap. Is it worth it? Tough to say, but I could tell you this. What could make it go down? Eventually, buyers stop going into them. The stock starts to go down, and then people, instead of thinking they're having FOMO on the way up, they start to have FOMO on the way down. They don't want to be the one stuck holding the bag, and they want to preserve their gains. and they go into a race to sell. I've seen this before. We just saw this. If you look at the COVID stocks, okay, the pandemic work from home, stay at home stocks, you saw how Zoom took off. You saw how DocuSign and Teladoc and so many other of the companies that allow us to work from home, stay at home, how they just took off so much. And then what happened? These stocks went down over 50%, right? Over 50%. It's just that right now with the meme stocks like GameStop and AMC, these moves are happening much faster because there's a concerted effort by the quote unquote Wall Street Bets community on Reddit. Well, I shouldn't be doing air quotes for Reddit, but the Wall Street Bets community on Reddit are basically ganging up on a stock that they see as a shorted stock in companies that you would expect would be, would be viable candidates for bankruptcy. So what happens is the stocks go up, they're shorted. So short sellers, hedge funds, they have to cover their shorts. And now the stocks keep going up and it brings in new buyers because new people see it going up. So they think there must be something really amazing going on. It's just that the stock is going up, which I know, and it's always amazing when your stock goes up a lot. You shouldn't be amazed though when your stock goes up a lot. You should be in a stock that you believe in and that the story that you believe in is finally being realized by your fellow investors, right? It's not just a matter of it going up first and then believing in it. So anyway, the stock goes up, people have to short it. But what happens is when these stocks, people have to cover their shorts. But when these stocks go up, management of these companies all of a sudden say, you know what? We could do a stock offering, issue new shares into the market, a secondary offering, as opposed to an initial public offering, an IPO. And they sell shares and they raise a ton of money. And all of a sudden, these companies, which were bankruptcy candidates, now have enough cash to survive another day, either to turn around their business, reinvest in their business, or at least survive until, the reopening and we'll start going back to the movies, for example, with AMC. And that's basically what's happening. So it's just this feeding frenzy on these stocks. And as far as the Dogecoin goes, I don't know, I call it Dogecoin, the Dogecoin, but as far as Dogecoin goes, everybody is looking for the next Bitcoin. Everybody's looking for the next, everybody's looking for the next 1 cent crypto that's going to go to 35,000 or 50,000 or 60,000. And they see something like Dogecoin, it starts to go up. It went as high as 67 cents. Now it's, I think, about 67 cents. And now it is 41 cents. All right. And, it's down quite a bit. It's up quite a bit. It all depends where you bought it. If you're a Johnny come lately, then, you're suffering. If you bought it early, hopefully you're at least thinking about selling it, right? Or taking something off the table. And that's what's going on. But I want to focus a little bit more on speculation overall. So I'll just throw this up on the screen and let me see what I want to put up. Here we go. Okay. So the next one is, okay. So anyway, how can I lose money and how much? With this stuff, so I always say, I've been talking about AMC and GameStop and COS and other meme stocks. I've had entire live stream shows dedicated to this. I've been covering this stuff for a long time. I'm not new to it. And I've been talking about crypto and Robinhood since I started this show, well over a year and a half ago. So this is nothing new for me. I'm pretty well versed in this. So, but when it comes to the super speculative stuff, my feeling is you don't put more into these things than what you could afford to lose. I don't look at that with all investments. Like, don't invest more than you can afford to lose. When I look at like my IRA, my retirement accounts, that is money I cannot afford to lose. But I feel being in higher quality companies, index funds, et cetera. By the way, you cannot invest directly into an index, but you could invest into an index fund because that tracks or mimics the index, as you know. Okay. But, I expect my money to grow over time. It's like if the stock market went to zero. I don't think any of us could really afford to do that. Anyone who plans on retiring anyway. So, but make sure when you speculate with money that you could afford to lose. Speculation is not investing. Speculation is gambling. And before you say, well, isn't gambling investing? Because no, just because you don't know the outcome for certain doesn't mean you're gambling. You're investing. Investing, the longer term you invest, the higher your odds are of winning. With gambling, the longer you invest, the lower your odds are of winning. Okay, let's go to the next point. How will this help me reach my financial goals? Well, that's an important one. When you buy a Dogecoin or an AMC, I hear what you're saying. You're saying to yourself, well, having more money, supercharging my, the growth of the assets in my brokerage accounts or my retirement plans. Well, if I have more money, that'll get me closer to my financial goal. But in my experience of over 30 years as a financial advisor, is that people who have more money are the people who earn their money with good financial habits. Dollar cost averaging, investing every month, rebalancing their portfolios, keeping an eye on their spending, saving first before they spend. In other words, you get your paycheck. Do you spend your money and then try to save what's left over? Or do you save the money first and then spend what's left over? Because the latter part is a much more effective way to go. So that is the next point. Okay. How will an investment reach your financial goals? I don't see how just owning AMC is going to help you reach your financial goals. I'm looking for specific returns based on historical past returns of investments to see what we could do and mix and match our investments in order to help me create a portfolio for a client and for myself. Obviously, I invest for myself too, with certain risk parameters. That's what I'm looking for. That's totally different than just buying a stock because I think it's going to go up. Obviously, anything I invest in, I expect it'll do well. But I invest in a lot of things because every now and then, some of the things you have, you're going to be wrong about, and some things blow up on you as well. That's why we diversify. Diversification is a strategy that we use to minimize risk, but does not necessarily protect your portfolio from going down in a generally down market. I have these disclaimers so on cue. It's unbelievable. How does this fit in with my risk tolerance? Well, generally speaking, the bulk of your money is in more stable assets. If you're a long-term investor, stocks. Yes, I know AMC is a stock, but I'm talking about large cap stocks, blue chips, mid cap stocks, small cap stocks, dividend paying stocks. The speculation is a much smaller part of the overall pie, and it's okay to speculate. Look, I've seen speculative bubbles in biotech stocks where everybody just had to own biotech stocks. I've seen speculation in small cap energy stocks and everybody had to own energy stocks. And I saw it in commodity stocks. I've seen it in tech stocks. I've seen so many bubbles. And when you see stocks go up 100%, just going up like this, it's a speculative bubble. Now, if you're playing the bubble, I have nothing against it because hopefully you realize, hey, it's a bubble, whatever. I don't care. I'm playing it. I'm making money. Didn't make me smarter, but it made me braver. And sometimes bravery is what it takes to speculate and make some money. I find in my career over time that most people who speculate and have made money speculating, most of the time they wind up giving back the gains on the next, couple of speculative shots that they take. Most people just don't walk away from the table, or they don't take the bulk of their winnings from speculation and put it into something that is more in line with the risk tolerance. But you have to have the risk tolerance to speculate. I have clients who are pretty wealthy. They don't speculate because they don't have the wherewithal. Not to say that they can't afford to gamble a couple of bucks. It's mentally, it's just not their thing. They don't want it. We have that clearly agreed upon in our plans and our offering agreements, and we don't speculate. Some people do like to speculate. It really depends on you, but you have a risk tolerance, so you have to make sure you're within there. And what other things do I need to do first? I've got a separate screen for that. Okay. Before you speculate, do you have an emergency fund? Now, I'm not talking about if you're a young person, you're still living at home with your parents, and you're just getting started in life and you expect to be living at home for a while. And, you're just putting a couple of bucks into the speculative stuff. That's okay. You're entitled to, and maybe you got some stimulus money and that's what you're putting into the speculative stuff. A lot of people have been doing that for over a year now, and It's your money, by the way. You're entitled to do with it whatever you want. No one can shame you into doing something else with your money because it's yours. And this is a good learning experience for you. But, if you don't have an emergency fund because you're just out of college and you're still living at home, that's one thing. But what I mean is, if you're a little bit older, you're living on your own, and you have to actually have an emergency fund for a real emergency, and you don't have anyone else to go to for money for an emergency, you should have an emergency fund. We call that 3 months to 6 months worth of expenses in the bank in case of a job loss, an injury that keeps you out of work, a recession, and companies close down. It's harder to find a job. It's harder to find a job that paid you as well as the job you had before. These are emergencies, and you need to have cash on the sideline to, in an emergency fund to get you through those difficult times. And then there is, do I already invest in other assets and accounts? Now, if you're, let's say a few years into the working world, and especially many years into the working world, and you haven't started investing for your retirement and a retirement plan, 401k, SEP, so many different kinds of, retirement plans. You need to do that first before you start speculating. You need to start investing for the long term for your future before you speculate. So it's a no-no to speculate before. So don't think like, yeah, well, I'm way behind in my investing. I didn't do this account. I didn't do that account. I didn't set up my 401k plan yet. I'm 45 years old, but I'm going to make it all up with this one speculative investment. It's going to be worth $1 million. Save it. It's not happening. I'm not saying you can't make a couple of bucks, but you shouldn't even do it. You're just trying to jumpstart something because you're so far behind in something else. You're behind the 8 ball. And when you're behind the 8 ball, when the pressure's on, I really don't think that's the best time to make investment decisions anyway. And the real problem is you've given up the time. You've given up the last 10, 15, 20 years of letting time work for you, of investing and compounding and reinvesting dividends and interest. So there, okay? Next one. Do I have credit card debt? Okay. Do I have credit card debt? If you have credit card debt, then speculation is not for you. You don't get to speculate. No. I mean, you could do whatever you want, but if you have credit card debt, it's presumably because you're not able to pay your bills, right? That's why you have the credit card debt. And really, if you're doing that, then I want to say, no, you shouldn't invest in AMC or crypto because you think you're going to make so much money in those that you're going to pay off all your credit card debt, because you start to justify things in your mind. You're like, well, I'm doing this. I know it's wrong, but it's going to be so helpful that the end justifies the means. It'll be okay. I'll just make all this money. Then I'll pay off all my credit card debt. And then I'll be back to square one. And then I could start investing in a retirement plan or something else. No, your problem is personal finance. You just have spending out of control and your spending isn't matching your income. That's really what you need to work on. So there, just wanted to say that. I don't mean to do, chide you, but that's the way, that's the way I feel. So there's a couple of other things we need to take a look at. This is getting a little bit longer than I wanted to, but let's take a look at leverage. This is how people leverage. For the first thing they could do is they could use a margin loan. Now, you've heard a lot about how a lot of the meme stocks that went up earlier this year, earlier 2021, how people investors using Robinhood were getting margin loans and were using stock options. And there was even a technicality with Robinhood that allowed people to leverage like 100 times or something, just a massive amount of leverage that because of a technology glitch in Robinhood. But the point is, this is live video, guys. So this is, that's what happens. The point is, leverage can magnify your upside, but it also magnifies your downside. But if you're using leverage because you're counting on stocks going up 100% every single day, I think you have your head up your, okay. So that's what we have to understand. So if you buy $100,000 worth of a stock and you put in for your margin loan 2 to 1, so you could leverage for $50,000, you could buy $100,000 worth of a stock. If that stock gets cut in half, your $100,000 worth of stock is down to $50,000 worth of stock. How much money do you have left in your account? Zero, because all the money you lose is your money, not the house's money. All right. And at that point, you're going to have to put up money for a margin call. Okay. You're going to have to put in maybe another $20 or $30 or $40,000 to keep your account open, because the brokerage firm that extended you the leverage, they don't want to get stuck with your margin loan when you fail to pay it back. So what happens is they sell you out, and it causes these meme stocks to plunge, or you have to put up the money. And as a branch manager once said to me 31 years ago, he said, Mitch, your first margin call should be your last margin call. And he said, your first margin call is always your best margin call. In other words, when you get into trouble with leverage, you got to wipe that out. You've got to take care of that right away, or else it's going to wipe you out. It usually doesn't happen in just one little thing, and then what goes down, it goes right back up. The point is, people are using leverage by borrowing money against their stock in order to buy more stock. And that's, I think, one of the things that's driving up AMC today. The next thing is stock options. Now, stock options is leverage 10 to 1, because one stock option represents 10 shares. Okay. So it's 10 to 1 leverage. So if you're buying a stock option on an AMC, so you let's say you want to buy typically stock option, it's going to cost like 10% of the total trade. So let's say AMC is, I don't know where to go at, it's 35. So $35,000. So maybe for $3,500, you'll buy one stock option. All right. It'll be 100 shares for the option. It's just a massive amount of leverage. And what happens is, if the stock goes down, well, your leverage buying the option helps propel the stock higher with buying power. But there's a very high chance that if the stock goes down, the value of your option will plummet. And a lot of people don't understand how options work. So that's how people leverage. Anyway, I appreciate you watching the show. I hope this helps you with your understanding. So it's not a matter of should you run out and buy AMC or Dogecoin or some other speculative investment. It's really about, are you right for speculation in the first place? And then if you are right for speculation, it doesn't mean you have to go with an AMC, but at least know that you've taken all the necessary steps before you actually speculate, so that it doesn't actually wipe you out. All right. Thanks for watching. I'm going to get going, and I will be back tomorrow.